Welcome, everybody, and thank you for joining today's session. My name is, as Miha said, is Stefan Wagner. I'm the head of business development at Vespa. I'm really looking forward to host this webinar together because we're bringing 6 industry leaders together and experts who collectively pretty much reflect the full life cycle of actively management, from structuring, issuance, legal frameworks, operational mechanics, execution listings, and distribution, everything else. AMCs have grown from literally a niche structuring tool to one of the most flexible and fastest scaling investment wrappers now in the market. But with that growth has also come complexity, more issuers, more strategies, more jurisdictions, more oversight, and increased investor expectation. Today's the webinar is designed to cut through that noise. What you can expect, we have sort of little 5 rounds we want to go through today. Sort of one is the foundations of the AMC ecosystems, a little bit explained. Some lessons from the real world. So maybe we have some war stories. So please feel free to comment on that one. Spotlight the role of each of the participants in this ecosystem, the state of the market in 2025, and sort of what we looking ahead, what we expect in 2026. Before we begin, I'm honored to welcome our panel. I start with Sean, who was gracious enough to stay up late enough and join us from Singapore. He's the head of distribution at Kyros Capital. His background really is interesting because it spans both traditional fund management and structured finance worlds. So he really has a unique perspective of how the classic fund world compares versus the innovative SPP and AMC based solutions. Then we got Julia. She's the head of paying agent services at ISB. She has an incredible deep knowledge in operational leadership, making her insights really essential to what we're going to talk today. I know so many AMC issuers who use and work with ISP for many years, so I'm really looking forward to what she has to say. Then Romu, he is the global head of proprietary client interface at Natixis Corporate Investment Bank. He goes across everything there with more than 25 years experience across equity, Delta One, financing, structured products. So that's going to be a real insight there as well. And then Rico Blaser, he's the co-founder and CEO of Vesta, and with that also my boss, so I'm going to have to be nice to him. But before starting Vesta, Rico himself managed one of the largest AMC's franchises by a Swiss insurer, so that gives him literally a first-hand insight into both the trading and operational challenges that asset managers face. Then I go over to Patrick. He is the partner and head of banking and finance capital markets at Mayer Brown in Germany. Thank you very much. Actually, welcome back, Patrick. You have been really kind with your time and contributed. This is not the first webinar you contribute, but you have a very deep expertise in capital markets, structured products, derivatives, synthetic risk transfers, and particularly with complex issuance programs, which leads us back to the thing. And then last but not least, obviously Maurizio, he's the head of sales and execution at BX Swiss. Very long-standing experience in structured product markets across Switzerland. He brings a deep insight into how exchanges like the BX Swiss, for example, handle listings, trading, execution of AMCs, and other bespoke vehicles. So we have a 300-degree view here. And just to start everybody off in a sense, I'm going to ask Rico right away to get us started off. Could you explain what an AMC actually is for those who may not be unfamiliar, and why particularly did you actually set up Vesta and didn't stay at a big bank managing an AMC business?
Sure. Thank you very much, Stefan, for the kind intro. And now I also know why you gave me the simple question. So to start with, that's kind of you. So yeah, I actively managed certificate, or AMC, is a structured product whose payout is linked to a reference portfolio that is in turn managed by an asset manager. And the key part is that the underlying assets are not static, but change dynamically over the product life cycle. And so obviously this poses a number of operational and technical challenges. And so we founded Vesta to assist issuers in addressing these challenges and to significantly improve the experience of their institutional clients. As a company, we have a very narrow focus. That is, we're a pure play technology company, and we're 100% committed to continuously improving our offering. By now, we are the market leader in this space, and we're serving a good number of customers, both large and small. I'll leave it with that in the interest of time, because we're a big panel and have very limited time. So back to you, Stefan. Thank you.
Okay, thank you. I mean, I'm going to ask Patrick here because, you know, from a legal perspective, AMC, actively managed firm, is not a legal definition. You know, what does it actually mean? It's more like a commercial label or a marketing label. What are actually the legal characteristics, if any, that truly distinguish an AMC, and what do you issuers and AMs and investors need to know?
Yeah, thank you, and hello everyone. I hope you can hear me. So we actually, it's correct. Yeah, it's first of all not a legal name. It's we would say a name for a specific segment of structured products. And the character of the AMC can be more or less divided into two principal structures. The first structure is in principle very often an on-balance sheet bond, note, yeah, debenture, whatever your relevant jurisdiction is, that is linked to an index. And the index is composed by the sponsor and the manager, and the index is subject to management rules and an index description and the relevant procedures and pursuant to that index description. Yeah. The other structure is an off-balance sheet structure. So usually a special purpose vehicle is being set up. That is also then managed by an investment managers and sponsored by a sponsor. And the investment manager then directly invests with the proceeds of the issuance of the notes or bonds or debentures, whatever the SPV issuers is. And the manager invests the money received by the SPV into the assets under management of the SPV. The difference between both is more or less an insolvency related topic. Yeah, so if there is an SPV, then usually the investor is indirectly linked to the underlying assets, and an SPV is usually set up insolvency remote. In the case of an on-balance sheet AMC, investors take the credit risk of the issuer besides the risk of the underlying index. So these are in fact the two material differences from a legal perspective regarding AMC structures.
Thank you, Barry. I mean, you just started already. That's why we have actually, you know, on-balance sheet and what we call off-balance sheet issues. Or no. So my next question is to the on-balance sheet issue. Would be Romu. Many managers launch an AMC that, you know, assuming assets will naturally flow. In your experience, how much does the choice of issuer influence a manager's ability to attract capital, new capital, and more specifically, what tangible difference does partnering with a tier one bank like Natixis make?
Yeah, thanks, Stefan, for the question. Well, perhaps the first answer here ties directly to the strategy itself. Yeah, that's the cornerstone of any AMC launch. To me, it all begins with a solid idea, a well-thought selection, or an effective strategy. Let's not overlook this crucial point, which is strategy comes really first. Next comes the question of the issuer. From our perspective, choosing Natixis CIB means that you are going to partner with a group that quotes over 100,000 structured products per day and issues around 20,000 notes per year. This serves as a strong testament of our robust processes, ensuring seamless experience for our clients. Additionally, working with a tier bank grants you access to an extensive pool of innovative ideas, thanks to a team of experts in structuring and our colleagues from the research department. Then the next one is, what about the solid balance sheet? with us, it's a single A rating, which further enhances our credibility. It's important to note that even if the mark-to-market of the AMC is not directly impacted by the issuer spread, having an issuer with a strong credit rating is definitely still advantageous. And lastly, two very quick points. So there's the proximity that you create with your clients. Once they get accustomed with the set of documentation, and as long as they have sufficient credit risk appetite, you're likely to continue working with them. And the very last element is the competitive pricing, which comes as well with, would I say, as important as the strategy itself. Let's discuss this.
Yeah, couldn't agree more. Now would be interesting to hear the other side of the coin, basically, for the off-balance sheet issue, which would be Kyros, and this is represented here with Kyros. Sean, which type of client objectives or structuring needs still or require or are much more suited to off-balance sheet SPV solution, and what characteristics of those requests make the SPV en route uniquely effective versus, let's say, on-balance sheet, or what can you do what others can't do, basically?
Yeah, so I think when you are an investment manager, what are the main things that people ask of an investment manager is to mitigate risk. And so I would say every client who wants to set up an AMC really should be looking at mitigating the risks in the best possible way. And I think you can only do that really through an off-balance sheet structure. You know, we've seen over the last 20 years, you've had Bear Stearns, you've had Merrill Lynch, you've had Lehman Brothers, Credit Suisse, Royal Bank of Scotland. They've all gone bankrupt. With an off-balance sheet structure, you have no credit risk. So if you are going to investors and you're saying, look, I've got a fiduciary responsibility to look after your assets, I would say you have a fiduciary responsibility to mitigate those risks as well by choosing an off-balance sheet vehicle. Now, the way we do it is we structure our off-balance sheet vehicles through a Luxembourg fund. So it's a little bit like if BlackRock set up a fund and BlackRock go bankrupt, then the assets within the fund does not go onto BlackRock's balance sheet. So you're not taking the credit risk of BlackRock, so to speak. But also, as you say, the off-balance sheet vehicle allows us to structure private credit deals, private equity deals, digital assets, real estate. We've even securitized insurance contracts as well. So in an off-balance sheet structure, you have no credit risk, but you also have a complete gamut of investment opportunities and ideas to obviously take to your investors.
Okay, thank you. Now, either if you're an off-balance sheet or on-balance sheet issue, you always need a paying agent, basically. So, but very few people, I think, actually know what actually the paying agents, besides the people who have to deal with them or interact with them,
Yes.
but very few probably know. Can you maybe a little bit, Julia, explain a little bit what the role of a
Yes.
and responsibility also of a paying agent in the AMC
Yeah.
ecosystem is?
Of course, the paying agent is the operational backbone of the AMC, because we, in the practical term, we set up the AMC in the clearing system. So we open them in SIX, Clearstream and Euroclear. So we make them accessible for the investor. We manage the subscription and redemption. So our trading team accept the orders from other banks, place the order, and make that the money flows into the structure. We execute the distribution, the dividends, paid out the interest, and even the principal payment. In the short term, we make sure that the money flows correctly, on time, and compliance with all rules. That's the most important thing. But what else we do out the clearing system. We handle the tax reporting, the AML duties. Sometimes we have from the correspondence bank some due diligence questions we have to fulfill. There are many things we have to do in the cross-border rules and world that we can handle the stuff. Everything is behind the scene. Nobody sees it, but it's a lot of things. Without an AMC would not work. Simple like that.
Yeah, you need one. AMC doesn't exist without the paying agent, exactly.
Yes.
Now, once the AMC exists, many are what we call, private placements or traded OTC, and the bank calls are basically paying agent to in there. But more and more, I definitely see people are trying to get AMCs listed on the exchanges. So Maurizio, now I'm over to you. Basically, you have seen all the products that are exchange listed. Where do you see sort of an advantage maybe that AMCs have over ETFs or funds for both investors and issuers?
Well, basically, if you compare AMCs, which are getting more and more popular, that's a simple reason. I think there are advantages, let's say, for investors, but even for issuers. For investors, the main advantage is, from my point of view, you have access to some kind of niche strategies, things where maybe are too specialized or too small for a full regulated fund structure, like thematic equity, quant overlays, alternative exposures, and so on and so forth, are easy transmittable into an AMC. An AMC is simple to set up, so in essence, if you have a proper setup, you just you can aggregate that. You need an IC instead, from an investor point of view. If you're, for example, an independent asset manager, you have an IC, you can put together your investment strategy instead of a management account set up. And from the other point of view, it's transparent, and you gain tradability. You have intraday pricing, continuous market making, and the clear description of the strategy through the term sheet. For issuers, it's basically the same. You are fast, so the time to market is very fast. Days, or in the best case, days or weeks instead of months, for example. Economically, it's attractive for a lower minimum size, and there's no heavy fund governance if you compare it to a fund, and it's highly customizable, which allows you access to multiple fee models, and by the end of the day, you're very fast in regards with time to market.
I mean, maybe a little follow-up question here, which leads me into the next round, is, because it is such a flexible instrument, you must have probably seen some unusual or unconventional products somebody tried to list on the exchange, and maybe you can walk us through how you handle that approval or polite rejection, basically.
Yeah, I mean, typically, let's call them the unusual things is everything which is linked, let's say, to private assets, because they're very liquid. If it comes to private debt, private equity, or even if you want to structure, let's say, I don't know, arts or your car collection into an AMC, that's getting difficult because we have, let's say, some challenges. For example, how will you ensure a fair valuation if you want to gain tradable access through a stock market? How can you guarantee liquidity? How can you guarantee to investor if in case they want to sell to get a proper bid price and exit out of the strategy? And ultimately, these are the typical requirements we are having. And more than one time, we did receive requests, especially linked to private debt, private equity, and all these alternative investments, where we had to decline there because of the lack of transparency and the lack of liquidity. Yeah.
I mean, the next one probably who gets some really unrealistic requests is probably the paying agent, Julia. I mean, do you?
Yes.
Any war stories from the front, basically?
The worst story was once when I had to securitize young football player, kids, almost kids. We had a request to securitize kids, so really the young talents to securitize, and this we really refused. Because I can securitize football player with adults, but if I work with kids, it's my ethic which doesn't work.
Wow, okay.
So there are sometimes really crazy things, but it's getting better and better over the years.
Okay, people become more reasonable. Okay, yes, I'm glad to hear that. Okay, I mean, Maurizio said, you can't do the on the exchange listed sort of the private equity one, but Sean, you guys do a lot of that kind of stuff. And any unconventional trades that you would be able to share there?
Yeah, definitely. not children, but so we've actually had quite a few wild requests. We had one from obviously a Greek shipping company who wanted us to securitize one of their vessels. For us, it was relatively easy actually, because each vessel's held in an SPV, and then securitize the shares of an SPV. The deal actually never came about, but it was still quite an interesting conversation to have. Private jets, another one people have come to us for. But one of the ones that I think we're talking to the manager now, and pretty much looks like it's going ahead, is we're going to securitize I would say a famous wine investor's wine portfolio, or an investor out in Asia who has a significant wine portfolio, and he's looking, pun intended by the way, looking to make his investment more liquid. And I think that is could potentially be quite interesting. It's a rare collection of wine he has, so that I think would be a pretty interesting deal.
Yeah, we definitely
and it's liquid by essence.
Exactly. Yes. Yeah. Well, you hope there's liquidity in it, otherwise somebody may have used the product.
Yeah, but we definitely see more on our platform non-bankable asset being securitized to generate liquidity, definitely. In one way, form or the other. In this case, it's definitely a product associated to myself. Romy, I mean, I'm sure you have seen also some managers coming in proposing some very optimistic names, the Stefan Wagner never can lose money strategy, or what is the most memorable one, maybe?
That's frankly, I believe we have very reasonable clients compared to my colleagues. I mean, but it's linked to our product offering, certainly. I mean, as we being on balance sheet, we are not capable of doing the wine business, which obviously is an interesting item. But another discussion, another webinar, Stefan, you need to organize. Where we've had discussion in the past, it hasn't really been about the name itself, but it's rather been on the description of the strategy. As you just mentioned, Stefan, it was more that we had to temper the way things were presented when it came across being overly optimistic or oversimplifying a complex mechanism. For example, I recall some extensive discussions with a client regarding the launch of our very first ESG AMC, and it was quite a lengthy process because we needed to navigate two different filtering methodologies. On one end, the advisor has its own selection process, which wasn't entirely aligned with our methodology, so we couldn't label it as such. So as a result, and with the assistance of our experts from structuring and from our Green Hub, we developed a dual methodology, which allowed us to launch our first ESG AMC labeled as such. But that's less exotic than some other stuff.
I mean, this already leads me to actually ask Patrick, because you just talked about how to define discretion, and I often sort of joke, defining who has discretion takes longer than drafting the rest of the document, basically. So the question for Patrick is: so how do you manage the regulatory? I call it circus. This is where one jurisdiction wants the PM to have zero discretion. In extreme case, another one wants them to have full discretion. And obviously, everybody insists that their view is the only correct one.
Stefan, yeah, this is a tricky question.
Sorry.
There are two elements of it. I mean, the first element is what we usually look into is, I mean, there is a kind of a investor protection angle to that, yeah, and you don't want to mess it up with investors, yeah. So I think for that purpose, it is from our perspective quite important to be in the rules of the management, or in the rules of the management agreement, or in the rules of the index, to be clear in terms of what terms you use. Yeah. You often see free discretion, absolute discretion, reasonable discretion. What does it mean in the end? Yeah, I think it also depends where are you located, what is the jurisdiction governing your document and your AMC. So I only can recommend to be quite careful in using that term in a way that is most consistent. Yeah, I mean, you should avoid to use too many terms. Yeah, make a decision on what is your perspective in terms of discretion and how you interpret discretion. Yeah, I think that's quite important, because otherwise you can risk of becoming that there could be a dispute about the discretion of the involved parties and whether there has been some breaches of the portfolio management services or the index provider services. So I think it's quite prudent to be clear what is actually your approach, and to be then really precise and consistent with the terms in the rules and the guidelines of the index. I think that's the most important thing from a practical perspective. Yeah, from a legal perspective, there's no clear guidance. Yeah, I mean, it's a civil law perspective, and there's a regulatory perspective, in particular when it comes to conflicts of interest. These are the topics we look into. Yeah, and I only can recommend to take this point very serious, because it protects you and it protects the product and the quality of the trust into the product.
Oh, thank you, Patrick, for taking that difficult question. To you, over Rico, all these things need to be then managed and obviously observed or controlled. What are they allowed to invest in? What happens? Everything else. But we have still encountered quite a few AMC issuers who manage all of that out of spreadsheets, which could be a ticking time bomb. And what kind of things have you encountered in this? And basically, how does Vesta go about it to diffuse that time bomb? And maybe you've seen it even applied for things that we didn't expect originally what it would be used for.
Yeah, I mean, when I worked as the head of a quite significant Delta One trading operation, and I should mention this was in the early days of the AMC boom, when we still had billions on spreadsheets, literally. And then I noticed a significant uptick in client requests for more frequent rebalancings. It started out, believe it or not, that people just rebalance like once a month or so, and then over time, in the end, in my trading career, it was like some clients, literally rebalanced their portfolios multiple times a day. So that was quite a difference. And then also they changed to more diverse underlyings. Sean earlier mentioned an example of insurance-linked products, but we didn't start that way, right? We started with just boring, very simple equity portfolios, 10 names, rebalanced monthly, that kind of stuff. And then it became more and more, and we started with, fixed income, commodities, nonlinear underlyings, and so on. And then also equities from more exotic locations that didn't have analyst coverage. And then this also led to more on the tail end, because then you have to process corporate actions and requests from clients to generate reports and audit trails and all of that stuff. And it really, when you do all of this on a spreadsheet, it at one point it gets out of hand. And so we really felt the operational challenges these requests brought with them, and the problem was that our old systems were, of course, designed for standard products like barrier reverse convertibles that have very static underlyings, and so there was basically zero chance that we could onboard these onto existing systems. And then I've personally, seen a lot of the operational nightmares of having to unwind trades, or there's a lot that can go wrong when you do this manually. And so this is actually when we realized that nearly everyone had or has these challenges, and that if we actually build a proper technology platform for this, then many other issuers could also benefit from it. And maybe you mentioned something about a ticking time bomb. I mean, to me, a ticking bomb, the way I interpret this is in two ways. So one is the operational risk, and one is the scalability risk. So the operational risk are questions like, are you sure that the rebalancing you executed is actually what the client asked for? Would you be able to provide the regulator with a point-in-time picture of what happened on a given day? Or if the client asked for a specific report, can you provide it to them? Things like that. That's on the operational side. And then on the scalability side, it's like if your clients come to you and want to have twice as many products, but with the same assets under management, right? Like they basically create more smaller products. Can you handle this? And will your margins significantly decrease? Probably they will if you do it on Excel, because it takes you the same amount of time to manage a small and a large product. So just all of these kinds of things make a really good case for automation, and so the Vester solution is built exactly for this, so you can focus on your business rather than focusing on these distractions.
Now let's assume that you have your tool like a Vester tool. You can calculate your NAV correctly, and with that, the market price, and you have been reasonable what you're going to package inside the product. So the question is then to Maurizio, what would they require basically, either Kyros or Natixis, if they would like to be listed on the BX Swiss, be admitted for trading, and could they do it, and what would be their requirements?
Well, I mean, the requirements, let's say there's no big distinction between let's say issuer and SPV vehicle. I mean, we look at basically let's say 4 or 5 pillars. So first of all, is it a qualified issuer, which means regulated bank or well structured, and that's important, documented SPV setup. Then key is the documentation, the strategy itself, the risks in conjunction with the strategy itself. Very important thing is how can you guarantee the valuation of the product? What's the fee setup? I mean, if you list something, we have to know what's the setup in regards with the fees. That must be clear. The underlyings must be transparent in order to make a proper valuation, as mentioned before. So pricing needs to be reliable. The market making, who is doing a proper market making, in order that the clients are assured if they want to buy or if they want to sell, there's a proper market making. And then the ongoing obligations we have, time information to the market if something is in regards with corporate actions, change of strategy, and so on and so forth.
Okay, so it's possible to launch a product either SPV or on balance sheet and get it listed. Excellent, good to know. Thank you. Now, Patrick, I'm going to come slightly back to you a little bit. I mean, everybody has a different role in this ecosystem, and the lawyers probably have to pull it all together with the documentation. Where does sort of everybody's responsibility lie, and where does it stop, and what is also the lawyer's responsibility in this?
Yeah, I mean, the responsibility should be clear, but we try to enable the product. Yeah, we don't want to stop it, but we also highlight the risks of certain structures, and the problem about AMC is always where is it located? What is the governing law? Yeah, where is the investor located? Yeah, because this could also result in certain regulatory aspects that have to be analyzed from the purposes of from the investor jurisdiction. So it's usually our task, first of all, to analyze which legal implications are there, which jurisdictions have to be analyzed. And then usually we document, or we help to document, and in particular with an SPV, it's quite a complex setup, So you have to form the SPV. You have to find a jurisdiction that works for the SPV as well as for the investor. Not all investors like certain SPV jurisdictions. You have to find service providers. That's usually not our task, but service providers are very important for the SPV, not only the portfolio manager, but you need paying agents. For example, you need accounts for the SPV. You need to undertake KYCs. This can take some time. With the paying agent. Because SPVs are newly formed entities. So it might take some time. And then we set up all the documentation, like with the paying agent, with all service providers. And finally, the most important documentation is the portfolio management top documentation, like portfolio management agreement with portfolio management principles for the SPV and the note for the SPV and for on-balance sheet. You have a structured product. So usually you issue out of a structured product documentation that the issue already has in place and have an index attached to it. So we can help to review the index description to make it as transparent and as binding and as riskless for the user as possible. Because not all index descriptions are simple. It really also depends on the investor, how much is the investors aware of what is an index, how to read an index, what is this sophistication. This determines the amount of work that has to go into that index description. And finally, in case of a listing, there are two listings. So either have a regulated market listing, you need a fully fledged prospectus to be approved in the European Union, for example, by one of the competent authorities under the prospectus regulation. In Switzerland, you also have a prospectus authority, that where you need to get the approval for the purposes of the listing prospectuses. And if you list on a MTF or on a Freiverkehr in Germany, it really depends on the rules of the exchange what kind of listing documentation you need. Whether you need a kind of an information memorandum or just a term sheet. It really is different from MTF to MTF. And we can help to set up this documentation and do all the stuff in terms of getting the listing done. So this is our role, and we try to coordinate everyone's activities or duties in terms of getting everything done and signed and hopefully then fully placed.
So it's quite a big job before anything can happen, what you guys have to do. Patrick, you already mentioned the important part is the paying agent, so that leads me nicely to Julia. It's the paying agent plays a crucial role in the AMC life cycle, especially around cash movements, fee payments, you mentioned coupon payments. Mm-hmm. From your perspective, how critical is the paying agent's role? I presume very important, but maybe you can elaborate a little bit. And how are the biggest risks or sort of misunderstandings you see around you or the responsibility of the paying agent?
The paying agent is very important that we get. I always say paying agent is the last in the circle comes. If it comes a product to us, we have to run and coordinate everything. I always describe we are like a conductor who has to work the orchestra that the music starts to play. Without it doesn't work. And we have really to coordinate the internal with us. It's coordinating the operation, the compliance. Then we have to the treasury that we have enough money to send around. There are many things to make the payments happen, the product. And then we have to coordinate with the issuer, with the legal advisor, that the prospectus fits to the 6 requirements, to the other ones. We help as well to have the MTF listing, for example, in Vienna. We have to coordinate and everything in a very short pressure because we are the last one. And then we have to see that the investor's bank is onboarded with us, that we can settle the trade. So there are so many things which makes little steps to make a product successful at the beginning. And if you don't have this under control from the beginning, it's a lot of frustration going around. And it's always managing the expectation from the people. And that's the crucial part. We have really to, and especially with new issues, we try to make it like a project team, that we start from the beginning, what we need, how we set it up. And then with the time, it's run smoothly, nothing happens, and they know what we need and what we don't need.
Yes. I'm sure you have a big, long checklist when these projects start.
Yes.
Sean, over to you. You mentioned it already a bit earlier. I think it's quite an interesting, unique thing that Kyros has is your, what you call the SPV fund model. Maybe you could go a little bit into this, what the advantage of that, in particular, maybe also versus other SPVs that are out there. I find that is a really interesting solution.
Yeah. So one thing, because we're a fund, we also adhere to fund regulation. So every product comes with financial statements. Every product comes with an audit, but also in terms of speed and time to market, we typically take 2 weeks to set up an AMC. And that's essentially really just because you have to wait sometimes for the ISIN from Euroclear. If Euroclear could get it to us in 1 or 2 days, then we could set up in 1 or 2 days really. But essentially what we're doing is we're setting up a sub fund within an umbrella, and each sub fund is legally ring fenced. It's legally segregated. It's off balance sheet. It's off balance sheet from every other, let's say, AMC, but it's also off balance sheet from us. So if we ever went bankrupt, the assets don't come onto our balance sheet. And typically, as I said, it takes 2 weeks to set up a product. But also, we use, for example, BNY Mellon as our paying agent. So BNY Mellon typically, they have connections with all the global banks around the world. So in terms of trading, we typically do what's called a DVP, a delivery versus payment. So we don't open up lines with other banks in that sense. It's much easier. There's no risk in terms of, let's say, a trade not going through. It's just one counterparty matches with the other counterparty in Euroclear, and that's it. That's pretty simple back office transaction. But also for us, because we are off balance sheet, we can offer a fully customizable open architecture solution. So we have a panel of paying agents, although BNY Mellon is obviously the largest. And then in terms of counterparties where you trade, we have over 30 counterparties now where you can trade from. And if a client wants to onboard with a specific counterparty, we can always do that. But if you want to onboard with Interactive Brokers because they trade, let's say, US futures very well, then we can onboard with Interactive Brokers. If you want CFDs, we can also doubly onboard with, let's say, Swissquote. So you could have 2 or 3 brokers within one product trading across 3 different brokerage accounts, 3 different, let's say, products, CFDs, futures, and I don't know, maybe you go with EFG for some bonds as an example. And that then all feeds into, obviously we use Vestas, that all feeds into the system and produces a daily NAV. So just in our opinion, it's a very flexible, it's quick to set up, and you have a lot of options in terms of counterparties. But going back to how we differ from other SPV providers, just at least in our opinion, is we're a fund, so we can do anything a fund can do. Just in our opinion, if you set up an SPV under the current regulations with BEPS, ATAD, CFC rules, foreign controlled company rules, you can no longer just put a bunch of SPVs into a trust and say it's off balance sheet. It didn't work in 2008 with Lehman Brothers and with all the regulations that you have in the world now. We don't think it works now either. So we use, as I say, we use a fund solution because everybody understands with a fund, if you have BlackRock and BlackRock goes bust, those assets don't go on to BlackRock's balance sheet.
Thank you. Now over to Remy. Natixis is sort of known for particular structuring capabilities and sort of customization in AMC's space. You know, and you've been innovating, and maybe you can a little bit go into what product themes have gained the most traction. You know, what is an interesting example, interest strategy brought to the market?
Yeah, thank you. Again, here, I think that's a fair comment. I mean, Natixis CIB has got a strong track record in structuring derivative transactions. We leverage our index wrapping capabilities to generate AMCs. So we utilize our cross-asset index structuring team, which is also BMR compliance. That enables us to operate within a framework that offers several key advantages. A very robust and secure framework, that's the first one. Direct market access, ensuring smooth execution. Low-touch execution paired with dedicated high-touch support. And innovation in our offerings, such as leverage. That's probably one of the difference with the on-balance sheet and off-balance sheets. On our side, we are capable of offering leverage, which is not easy. When it comes to traction about what we've seen over the last 18 months, it's more, I would say, bonds and structured products. So we've seen two teams that gains significant tractions. As you know, historically, we're coming from more an equity-focused background. Historically, the AMC have been used for that, as Rico shared with us earlier on. And what we have seen lately was an increase in bond requests. So this shift is intriguing and challenging for our AMC traders in terms of market liquidity. They are discovering that liquidity can be much scarcer in certain areas of the bond market compared to equities. So that has been that can be a challenge, and it's an interesting one for scratching head. And the other topic that gained a lot of traction has been the offering structured products. So there, to us, there's a strong appetite from clients for both the single and the multi-issuer offerings. That comes as well with a lot of challenges. We can offer at Natixis CIB our own structured products, and this is something that we already have live, and we are now working on whether we can and want to offer multi-issuer access. That's really what we see so far.
Thank you. Patrick, back to you. The sort of, you know, what has happened in the, have there been any key regulatory changes introduced in 2025 that impact AMCs? You know, maybe EU benchmark regulation or what's coming, and explain maybe what that means for investors, asset managers, and issuers, and what you see also, you know, in your view, what could happen in 2026, and maybe also could be critical in the sense, you know, maybe some of the issuers or asset manager a little bit sail close to the wind and push their luck. What kind of sort of behavior could potentially trigger maybe some more regulatory intervention in the AMC space?
Good positive message. Maybe first, it has not happened so much. Yeah. The European Union, I'm talking now from the perspective of European Union, is now more or less very actively involved in reducing the number of regulations and delegated regulations they are forcing the market to comply with. Yeah, so we see a wave of liberalization now, yeah, and reduced regulation. And I think the most important example is the benchmark regulation, yeah, which comes into force the 1st of January 2026, and it reduces its scope. So that's similar to other developments we see in other spaces like ESG. So the scope of the regulation is limited, and the regulation targets the most material indices in the market, and it takes out all non-significant indexes out of its scope. So most indices that are used for AMC structures are no longer regulated. So when you don't need an approval, authorization, or recognition anymore. If it's a non-significant index that you produce following the 1st of January 2026. Now, is this a good thing or a bad thing? Usually when the regulation is implemented, everyone cries and say, oh, that now we have more regulations. And once the regulation is reduced, then everyone complains in having less regulations because they just get used to it. Yeah. So in our case, we now see the developments, like we see risk factors and say, oh, please be aware, investors, this index is no longer regulated. And this brings a bit the message now it's no longer regulated. Now you are really a problem, because you are investing in a non-regulated index anymore. So this is always the backside of a deregulation, what I see from colleagues of us, that they start to turn it into a negative message, because saying it's no longer regulated, this is a risk for you. I think you have to tackle that topic now. And the disclosures in prospectuses become more relevant, because as an administrator like Natixis, and if you are registered in the ESMA registered, you have a relief from prescribing the index in a prospectus under the prospectus regulation. Once you are no longer registered in the ESMA registered, you cannot rely on this relief anymore. This would result in having more index description in prospectuses under the prospectus regulation going forward. There's a transitional period until September of next year, but just that everyone is aware, if there's a regulated prospectus, index disclosures have to go into the prospectuses again. So also be careful about index disclosures now and the index descriptions on the purposes of a replication in the prospectus, because it is then subject to prospectus liability. That's another perspective than when creating the index rules. And as I said, it doesn't mean necessarily it is a risk and relief and everyone can do now again what they want. I mean, people get used to the conflicts of interest perspectives of the BMR, and I think it's my recommendation that even though it's no longer regulated, keep track of these important aspects. When setting up an index, because it doesn't only because the regulation has fallen away doesn't mean that it's important for an investor to keep an eye on conflicts of interest and clear description of discretions, etc. So less regulation, but doesn't mean less legal observations.
Okay. Thank you, Patrick.
It's a very sorry, Stefan. It's a very interesting timing, and it's been a long time that we've not seen a relief of regulation of that magnitude, in fact. So it's very interesting from a European perspective to notice this, because I understand that as we couldn't impose the PMR to US and Asia, the European regulators say, well, in such a case, let's have a common playing field where everybody's on the same stance. And that's totally new. To me, it's new. And it's something it's a bit of a change and very interesting. There was one question in the chat on the side, which was, okay, what is going to make your life easier? Well, that's element, a bit of a relief on regulation. I wasn't really expecting on the BMR, but those type of elements are helping the market for sure.
Yeah.
Can I just make a comment about regulation? Because obviously, I guess from what both Patrick and Rommel said, there's going to be less regulation. But I think also investors need to be aware that there is more taxation around certain structures. And as I mentioned before, if you have an SPV and you set up an SPV and thinly capitalize that SPV. Essentially what an AMC is, you have very little equity and you have a lot of debt. And then you have to pay taxes on certain portions of your profits. Or if you do what's called a hybrid mismatch, where if you take debt and then use that equity purposes, you're also now going to be taxed both in the European Union and around the world. It's called ATAD 1 and 2. People can look this up, or BEPS. So although maybe there's less regulation there, if you're not tax compliant, your investors or your investment manager are going to get a rather large tax bill unless you're with a compliant structure.
But you don't need to forget here as well that we have always changes with sanction, grey list, which always turns a product in a completely different way on the risk appetite of banks and clients. Suddenly they don't want to do anymore an investment which is going now into Monaco. It's the best example. Monaco is suddenly on the grey list. Banks don't accept asset manager anymore from Monaco. So that's always the turning on the other side. It's the sanction and the AML purpose, which always can make a product completely smashed. And there we always have to think, and this is not the regulatory framework, it's the ecosystem which always changes and makes our life difficult, or suddenly you have a PEP in the structure. So there are many things we have to look as well in the regulatory framework, not to forget.
It's a constant moving target, yeah. Maybe coming to Rico, I mean, on the Vesta platform, there are now more than 20 AMC issuers and more than 2,000 external asset managers use it to manage thousands more of products. What sort of interesting trends did you notice in 2025?
Yeah, I'll keep that one short. It's true that we have a big treasure trove of data, obviously, on our platform, but this is completely confidential, basically, so I can't share any specifics. But what I can tell you is that in aggregate, 2025 has been a stellar year. It's been really successful for our clients. And I would even go further and say, like, if you look back the past 5 years, it's probably been the most successful year in the past 5 years, which is saying a lot. We see a lot of growth pretty much in every area and with every client. And this is true across regions. It's true across underlyings, both on and off balance sheet, listed and OTC. And we see also strong geographic expansion. As an example, South America has significantly picked up steam. So it's definitely exciting times. Let me leave it at that.
Okay, I mean, maybe with Kyros, you shown sitting in Asia, is there particularly interesting that has happened in Asia in 2025 for you?
I think for Asia, AMCs are a very new concept for most people. We deal with a lot of fund managers, EAMs, single family offices, and to be honest with you, even a lot of investment banks and some of the Asian private banks. And I would say the market penetration for AMCs is relatively low. People don't understand what an AMC is. People have never really heard of an AMC. But once they understand that, especially through as you can set up a product in 2 weeks, there's no upfront costs. You can kind of pick your strategy, you can pick your asset class. And then in terms of essentially investing into a product, especially compared to a fund, I would say I've set up 250 plus funds. Invested into a fund is an absolute nightmare. It's 80-page subscription agreements. It's KYC all over the place that then gets passed on to some outsourcing center in some other random. This obviously is just, it's safe, it's secure. You subscribe through your investment bank or your broker. It's a much easier transaction in that sense. Once investment managers, family offices, EAMs understand this, they're extremely positive on on what they want to do. They're coming up with ideas almost as, you know, when we're in the meetings. So I think 2026 will be, you know, will be a very good year in Asia for AMCs.
Yeah,
I think,
I mean, yep.
sorry, I think it's interesting what you're saying, and I shared it. I share this thought that the penetration is still relatively low, but for example, on our platform, we do have several billion in assets in Asia already. So and we do see it growing quite rapidly. It's one of the fastest growing regions. So I agree with you. 2026 is up for grabs. It's exciting.
Yeah.
Yeah, I mean, I think we see one stats on our platform actually at Vesta is that AIMs, or external asset managers, have come across the line and understood what an AMC is, become repeat users of the product. But I think the education could still be better and wider to get more people into it, basically. I think another trend that is coming is I see more and more people trying to get the AMCs listed on exchange, increased in listings, and that leads me to Maurizio. Sort of, do you see a similar trend then versus maybe a few years ago,
Yes,
people
clearly.
approaching you, and
Clearly.
you know, how is this shifting maybe between bank issues or SPVs, or can you share any other insights on it?
Yeah, I think it's clearly the aim because if you look where is demand coming from, and as we did discuss, these are mainly or a lot of let's say independent asset managers, family offices which run their own strategy. They typically use either banks, and we see more and more issuers as classic banks which are applying for listing. But nonetheless, as a matter of fact, we have more and more SPVs which are entering the market because they're flexible and have a short time to market. Said that, it's still, let's say, challenging for SPVs in order to get the proper listing at BX Swiss, or let's say at the stock exchange in general. But we're working on some softer solutions, like let's call them technical listings, whatever. We're working on a project which might make it easier in order to get a kind of, let's call it soft listing, which is somewhere in between a technical listing and a proper listing. That's premature, but we're working on a kind of project because we see a clear increased demand from everywhere. Let's say from the traditional balance sheet banks, but from the alternative issuers as SPVs are.
Thank you. I'm just looking here. There's some questions coming in via the audience, and Patrick, there might be one in there for you. Feel free to decline, but can a European AMC off-balance sheet invest into a single extra European investment fund, i.e. Cayman, Hong Kong, Singapore, Delaware, as an LP acting in a similar way as a feeder fund?
I have to say I need to check that, and I don't want to say this here online.
Yeah,
the answer, I'll answer that one. Yeah, we've done that several times.
We too.
You have done this.
We did it as well.
Okay, so here we go.
No problem with European issuer. No problem.
Okay, got it. Okay, thank you very much. Patrick, you're out of it. Don't worry. The other one was, I can even take that potentially. In off-balance sheet type issues, is it usually to see the strategy exposure generated via return swaps or QRS style indices rather than actually building the strat inside the SPV itself? I can say you from our side what I've seen both. I think JP Morgan has a really fun side of promoting where I say no ISTA, no problem, and basically they package their QRS structures inside a type of vehicle that's like an AMC, because then you don't need an ISTA and you don't need to negotiate credit index. But I also see the strategy managed itself actually in the SPV. Particularly, I've seen this even used by funds who want exposure to third-party fund managers, basically. I don't know if anybody else from the panel wants to comment on that one.
Yeah, I can, and this is typically something we're working on. I don't want to cannot give you too many details, but as regards to QIS indices, making them available within the AMC framework is definitely something which is cannot be higher on the list on my side at least, and this is for 26 for us, something we want to deploy, and of to your word, Stefan, definitely, let's make it easy. And we are not going to replicate it into the AMC directly. It's going to be investable as a brick. So you don't need any ISDA, but you have access to a list of QIS indices. So that's one of the hot topic, I think, for next year.
Now the question was, could each one of you share one thing from your experience you like to see change that would make your life easier when it comes to the AMCs?
Yeah, I think my perspective is quite clear. Usually when we have a project, it's very unclear towards the structure, if there's a new structure, in what direction the structure goes and directs. And I think what John has mentioned, I think what really should be investigated from the very beginning are the tax perspectives, the tax decisions and the tax consequences of certain structures, because you can lose a lot of money if we structure a product in towards a certain direction, and then the analysis starts later, and then it can revise everything. So I think taking a really coordinated, organized approach helps everyone. And usually this is what we try to recommend from the very beginning, to have a clear timetable, clear steps, clear organization aspects that have to be tackled when setting up the very first AMC, for example. It's very, very important.
Okay, thank you. Maurizio, what would you say?
Well, I think that's not that much to add, but I mean, by the end of the day, we are just the entity which is listing the AMC themselves. But I can say, out of experience, there's a huge demand, and what we can see clearly is a huge demand towards now. Now it starts to get a huge demand through tokenized for tokenized assets. Not for nothing, we are having our own parent company, which is Speaks Digital, where we were starting the first projects, and that's, from my point of view, the next step we're jumping in. Yeah.
Okay. Great. Romu, anything from you to add?
Well, aside from Patrick's answer and the regulation topic which you mentioned earlier, for me, from a very selfish point of view, is seamless execution. Because in the question, and Lucas, thank you for that question. Where is the pain point, and where do you want to get rid of them? I mean, is really what we're working on at the moment. Is thanks to the integration of Vester as a client platform. The topic for me is making this STP as much as possible to increase the volumes. So seamless execution is the other word for me.
Okay. I mean, Julia, maybe something to add from you, but also maybe if I could add one additional question. When it comes, what advice would you give an asset manager when picking an AMC issue in 2026?
Okay, just my wishful wish. One is will never happen, but as a paying agent in Switzerland, I hate the stamp duty on AMCs.
We all join you on that one, yeah.
That's something important, but it's wishful list we cannot change. And on the tokenization, we really work on the first project with Beige Digital, where we are a partner on the Beige Digital, because we are really looking into the whole digitalization as a paying agent as well, because it's the future. And for choosing AMC, please choose a solid, experienced paying agent. BB Mellon, who else? Ourselves, because it needs somebody who knows the market, knows the AMCs, because a lot of markets, it's not known yet. We see it in Dubai, where we have our own Sharia-compliant AMC. We see that the people don't understand, and you need a solid paying agent. You need solid documents. that the investor is the paper, the term sheet is proper written, that the risks are disclosed, whom you can sell, the distribution needs to be really proper looked up. That's something very important, that you don't trap into distribution. People do distribution, they don't know how to, that they are not allowed to do distribution. You don't want to have puffing on your back. There are many things which really needs to be taken. And the stress test that if the execution is running really smoothly, the whole everything needs to be run and transparent to investors. Be transparent if something happened, information. Be transparent and have the dialogue via corporate action. Yes.
That leads me a little bit to Jean. You know, what would you like to see change, but also, you know, what could be done to increase the adoption of AMCs?
Yeah, I think for me, especially in Asia, it would be nice if if it got to the point where people understand what an AMC is like they do in, let's say, Switzerland, for example, where I think, you know, you sit down with most asset managers, they're very familiar with AMCs. As I said, in Asia, that market penetration isn't really there yet, but hopefully, thanks to us, you know, we're going around and like I say, we're speaking to asset managers, banks, family offices, multifamily offices, EAM. So for us, it's just sometimes it's an education process as well. It's 2 or 3 meetings sometimes before somebody fully grasps the power of an AMC. Where I think in Zurich, you know, everybody just says, I want an AMC, and it depends on maybe they want an on-balance sheet or they want an off-balance sheet, et cetera, et cetera. And there's more discussions around maybe which provider they're going to choose. Where certainly in Asia, it's more of an education process in that sense.
Yeah, I think probably Asia maybe more, but I think that's globally a valid point. More education and about it, what it is. Rico, you know, I'm going to bring it home back to you in a sense. Vesta has sort of become the unifying layer on sort of an otherwise fragmented AMC network. You know, we're now probably, I think we calculated the other day, 23 different people from paying agents, data providers, issuers, everything connected. And obviously, the more become part of the network increases. So who do you expect to join the network in 2026? Is it new issuers, more SPVs, custodian exchanges, data providers, and you know, where will these now nodes, for a better word, or connections in the network create the strongest lift for the platform?
Yeah, let me start with maybe by saying that I can only second what Julia and John said in terms of education. I think this is necessary everywhere, and I would like to see more collaboration between the different issuers and the different parties in general in educating the public and making this an even more significant asset class going forward. And maybe also on the tokenization front, I think this area is particularly interesting in this regard because there a lot still needs to be done, and we really need to work together to create a universal standard. And I think I'm hearing now everyone is working on projects. We are working on a project as well, but they're all separate projects. They're all different projects. They all use a different standard, a different blockchain. And so I think there's a lot to be done to collaborate there, because actually as an industry, we want to make sure that we're going to win this race. So I think we would be well advised to work together. Then to your other question, Stefan, yes, I think you're exactly right. These network effects, they're very real and they're benefiting everyone. This kind of ties into the education point, right? And I'd like to give you some examples. So for example, we have issuers sourcing data from some of our other clients. We have custodians who are making their data available, which is obviously very helpful. We have asset managers asking for introductions to our issuers, which is helpful to the asset managers and the issuers. We have third-party technology providers that are making their offering available on our platform in the form of new features for portfolio managers and traders. We have asset managers that are starting to use our web widgets to show basically up-to-date platform data directly on their own web page. There's also a lot of traction on the API usage. So really, I see it as very much of a virtuous cycle where everyone benefits, because if the total market grows and our offerings grow with it, then I really think we all have a great opportunity and we can all learn from each other. And yes, in some sense, we're competitors, but we're also, because the market is relatively small to other markets, I think we have a big opportunity to work together. And so I'm really looking forward to 2026. And I think also from our side, you'll hear some major announcements coming in this area. So stay tuned.
Okay.
The cliffhanger.
I think we're going to end on this cliffhanger. I believe we have answered all the questions from online. Julia, Patrick, Romu, Maurizio, Rico, and Sean, obviously, thank you very much